Good morning, everyone. Thank you so much for joining us today. My name is Hajra Talat, and I will be your host for today on the webinar Year End Financial Audit for Tax Compliance Important Guidance for UAE Businesses. So, before we dive into the session, let me provide a brief introduction about our company. ACME Group has established itself as a trusted tax and financial solutions provider across GCC region and Egypt. We're committed to delivering high quality solutions various businesses across different industries. Our focus on quality and expertise has allowed us to build long term relationships with our clients. Our exceptional team consistently delivers value efficiently, making us a preferred service provider in the region. So now I would like to introduce our esteemed speaker for today's webinar, Mr. Taimur Khatak. Mr. Taimur is an experienced audit manager and tax consultant with over 6 years of expertise in accounting, auditing, tax compliance, budgeting, and financial reporting. He holds a BSc in applied accounting and is a certified accounting technician and ACCA member. Taimur excels in managing accounting operations, performing audits, and ensuring VAT compliance. His skills in evaluating internal controls and resolving tax queries make him a trusted advisor, providing valuable recommendations to enhance clients' financial practices. So, before we start, I'd encourage everyone in the audience to share your questions in the Q&A section. This will, help us create an interactive session, and it will ensure that you gain the maximum value from our webinar for today's session, as your participation is going to be essential for the success of this event. So now I would like to hand over the stage to Mr. Taimur to begin the webinar.
Thank you, Hajra, for using such kind words. For today's webinar, we will be discussing about financial audit for tax compliance in UAE. As far as the table of content is concerned, first we will discuss about the introduction of financial the introduction of financial audits, the overview of UAE tax system, the importance of financial audits in UAE tax compliance, the VAT compliance and its impact on the businesses, the common mistakes that are being made while filing tax returns, the corporate tax procedures, what are the penalties of non-compliance with UAE tax laws, and how the financial audit helps in reducing risks in general. Mosem, next slide. So as far as the introduction part is concerned, the financial audits are performed with the main intention that to know that whether the financial statements are actually reflecting the true and fair position of the company, which is the financial position, and is it in compliance with legal and regulatory standards. So when we are talking about legal and regulatory standards, the main aspect of it is the tax compliance. An audit is an integral part to ensure that businesses in UAE are tax compliant and that the revenues which are reported are accurate. So with financial statements being free from errors and fraud are aligned with the applicable tax laws. Mosem, next slide. So with key aspects of the UAE tax system, it The VAT was introduced in 2018. The rate of tax was 5%, and it was imposed on goods and services. For corporate tax, the tax was levied, will be levied for the profits exceeding 375,000, and it started from June 2023. As far as the excise tax is concerned, uh, it is applied on specific goods such as tobacco, sugary energy drinks, and sugary beverages to promote public health, and it was introduced in 2017. In general, the taxes that have been collected are form the, you can say, backbone of UAE's economy, and it's the only non-oil revenue for the government. Next slide. The importance of financial audit in UAE tax compliance. The biggest advantage is that the records are accurate. It ensures that when the records are accurate, it leads up to getting surety that our VAT filings are accurate, our profit calculation will be accurate, or our expenses are accurately recorded. So there is no risk of under or over stating the profit. It leads up to transparency and helps businesses maintain transparent records to avoid tax evasion errors. Companies need to comply with federal tax authority rules to avoid fines and penalties, because if the accuracy and transparency is not met, ultimately it will be followed by the penalties. So if and will also help in getting the risk of tax evasion reduced. Next slide. Was the next slide. Legal framework for the financial audits in UAE. The UAE has established a comprehensive tax framework, including Federal Tax Authority, which oversees the administration and enforcement of taxes. The corporate tax law, as discussed earlier, was introduced in 2023. It sets out the guidelines for calculating businesses' profits and what kind of expenses are allowed and which expenses are not allowed uh, to calculate the accurate tax liabilities. VAT law requires businesses to register first upon meeting the threshold revenue requirements, and it leads up to collecting and remitting of VAT on goods and services. Excise tax law governs the taxation of harmful goods, ensuring that businesses in this sector comply. The FTA enforces these regulations through audits, penalties, investigation, and uh, VAT audits if there's any non-compliance found. Move to the next slide. Why financial audits are essential for compliance. Financial audits verify that businesses meet their tax obligations, including VAT, corporate tax, and excise taxes. By ensuring accurate financial reporting, audit helps businesses avoid penalties for the late filing and incorrect tax reporting. It encourages and promotes business to maintain proper records and supports transparency. Audits can help businesses identify potential legal risks before they escalate into significant issues. Also, next slide. So this is the time for the poll question now. Are you people familiar with the process of preparing for VAT audit in the UAE? Your time is 30 seconds and it starts now. The time is up now. There were 67 responses, and unfortunately, 50% of the people are not aware of it. I believe that's why we are having this webinar in the first place. And also, next slide. The financial audit process in the UAE. Pre-audit planning is the first part, which is like the field work. Reviewing financial records before the year end, including balance sheets, tax filings, and invoices, seeing if there's any lagging in the data, verifying the accuracy of the VAT returns which have already been filed, and corporate tax reports, which will be reported. Their calculations. Once these are being done, an audit report needs to be prepared. While performing the audit, uh, the findings for the discrepancies comes with the recommendation also. Who Before finalizing the audit, whatever the discrepancies have been discovered during the process, uh, the auditors normally give all of the recommendations and the corrective measures. Uh, Once the follow-up is done, the corrective measures are implemented, and the whole process in general assists businesses in adjusting their tax filings as necessary and accurate. Next slide, Mosam. As discussed earlier, there are three main components of the taxes in the UAE, which are VAT, corporate tax, and excise. VAT is applied on goods and services. The rate of tax is 5%. The corporate tax is applied on the profits exceeding 375,000. The excise tax is applied on the goods which are harmful to health, such as tobacco, energy drinks, and carbonated drinks. Also, next slide. VAT compliance and its impact on businesses. The implication for businesses for VAT. First of all, they need to register if their taxable revenue exceeds 375,000 annually, or you can say from the date of registration in the last 12 months. Once the companies are registered for VAT, they need to do the VAT return filing, which are either quarterly or monthly, depending on their nature. Businesses must issue tax invoices that clearly state the VAT amounts, and there's other criteria such as the TRN number, the supplier and the customer addresses, um, the gross amount, net amount, the VAT amount, and the rate of tax. For records, maintaining accurate records for VAT-related transaction is crucial for tax audits. Also, next slide. For corporate tax, the applicability is for the profits exceeding 375K, and the rate of tax is 9%. So, for example, if a company is making 500,000 of net profit, the 9% of the corporate tax will be only applied to the 125,000 portion of it, which exceeds 375K. Businesses must file annual tax returns with the FTA. For the corporate tax return filing, uh, the due date is 9 months after the end of the fiscal year. The financial statements must be audited by the certified auditors to verify accurate taxable profits. Also, next slide. So, for excise tax, goods such as tobacco, carbonated drinks, and subject to are subject to excise tax. The rate of tax for tobacco and energy drinks are taxed at a rate of 100%, while sugary or carbonated drinks are taxed at 50%. Businesses involved in the sale or manufacture of these goods must register with FTA and file excise tax returns. The FTA conducts audits and checks to ensure the excise tax is being calculated properly and levied and reported. Also, next slide. Now, so what is the difference between financial audit and tax audit? A financial audit is a comprehensive review of companies' financial statements to ensure accuracy and compliance with the financial reporting standards, which are IFRSs and tax laws. Um, the scope is broad, covering all financial transactions, and the objective is to verify the accuracy of the financial statements, whether they present the true and fair position of the company, and is it overall tax compliant. As far as the tax audit is concerned, it focuses specifically on a company's tax filings and compliance with tax laws. The scope is narrower and it focuses on just tax records. The objective is to ensure that the business has correctly calculated and remitted its taxes to the government. Mouse the next slide. That's the second poll question. Does your company has a software solution for generating VAT compliant invoices and records? The start time starts now. You'll have 30 seconds for it. The time is up. There were 66 responses. 74% people have said yes, that they are generating VAT compliant invoices, and 25% people have selected no. So most of the companies should use softwares which are um, advised, or you can say referred by FTA. Next slide, Muslim. Common tax compliances in the UAE and their issues. Uh, the common mistakes are that incorrect VAT filing. Businesses may mistakenly report VAT on exempt goods or services, or may include out of scope goods or services, leading to overclaims. Uh, under reporting income, some businesses may fail to report all sources of income, leading to tax underpayments. Delayed payments, businesses failing to remit taxes on time to incur penalties, incorrect corporate tax calculation, misapplying the deductions and exemptions can result in inaccurate corporate tax filings. Was the next slide. Benefits of financial audits for tax compliance. Uh, if the companies are going through the process of financial audit, they will have an advantage of early detection of the issues uh, through the audit findings, which will also be followed by the recommendations by the auditor. As a result, the issues will be sorted. The second advantage is accurate tax filings. Uh, there will be no issues of over or underpaying the tax amounts. Improved financial management. Audits promote better record keeping and financial reporting, and ultimately it will lead up to peace of mind for the companies. Muslim, next slide. Auditing procedures for VAT. It starts from the process of sales and purchase, verifying whether VAT has been properly applied to the sales and purchases, collecting or issuing the tax invoices, ensuring that tax invoices contains the correct information such as VAT amounts, uh, exemptions and zero rating, verifying whether the exempt goods or services have been correctly excluded from VAT, audit methods, sampling the transaction and reviewing them, inspecting the VAT returns, and checking supporting documents such as invoices and contracts. Next slide. Corporate tax audit procedures. Uh, it starts from ensuring that the profit reported for the tax purposes matches with the financial statement, or if it doesn't matches, then maybe adjustments needs to be passed to calculate the exact profit, which is like a taxable profit. Uh, Deductions and exemptions, verifying whether all of the business expenses and exemptions are correctly applied. Transfer pricing rules, ensuring that the intercompany transactions are in compliance with the UAE transfer pricing rules. Reviewing the financial statement, expense documentation, and profit reports. Next slide, Mozam. Verifying whether the excise tax has been correctly applied on the sale and manufacture of taxable goods. Excise returns, ensuring that the businesses have filed excise tax returns on timely and accurately. Inventory checks, physically inspecting the goods and confirming tax has been applied to the inventory. Next slide, please. This is the third poll question. Have you conducted a reconciliation of your books and VAT returns in the last quarter? The time starts now. The time is up. 15% people have not performed the reconciliation of the books and VAT returns in the last quarter, and I believe this is the high time to start the process now. Was on next slide. Common mistakes in tax filings. Businesses often incorrectly claim VAT refunds on exempt goods. So the people filing the VAT returns, the accountant or the staff, must know which goods are exempt to keep a track of it. For corporate tax errors, incorrectly reporting profits or overlooking allowable expenses. And the last one is late filing. Missing the tax filing deadlines leads to fees and penalties. Next slide, please. If the non-compliance, if the company is not compliant with the UAE tax laws, as we can all expect, it will be followed by penalties. There are three types of penalties. One is late filing penalty, tax evasion penalty, and incorrect reporting penalties. The late filing penalty is something which where the filing has not been done on till the deadline. It is as far as the fine is concerned, it's 1,000 for the first time violation and 2,000 for the subsequent violation. For tax evasion penalties, severe fines and potential legal action for businesses found deliberately evading taxes. Businesses face fines based on the severity of underreporting. Muslim, next slide. So these are two case studies for VAT non-compliance and corrective actions. A retailer was found to have incorrectly claimed VAT exemption uh, on non-exempt goods. As far as financial audit outcome is, the audit identified the discrepancy leading to payment of VAT taxes and interest. And the second case study is a business underreporting profits to reduce corporate tax liability. And the outcome is the audit revealing the underreporting, and the company was required to pay the correct tax plus penalties. Was the next slide. The role of internal controls and tax compliance. Internal controls are process implemented by a company and structures which are built by the company inside the organization to ensure the accuracy and compliance of its financial reporting. The importance is effective internal control helps and prevents errors and frauds, ensuring accurate tax filings and financial statements. Next slide. The role of technology in facilitating financial audits. Um, The data analytics part helps auditors identify discrepancies and potential tax compliance issues more effectively. As far as the digital records, with the technology, maintaining in digital records simplifies audit process and ensures better tracking of financial transactions. Next slide, Moza. This is the fifth poll question. Has your company conducted a risk assessment for a potential tax liabilities in the past 12 months? The time starts now. Time is up. There were 58 responses. Unfortunately, for 56% people have answered as no, and that means most of the companies have not performed the risk assessment for the potential of tax liabilities um, in the past 12 months. It must be done by all of the companies. Next slide, Mazen. Key challenges faced by UAE businesses in the tax compliance, understanding the complex tax laws, the introduction of new taxes such as corporate tax, presenting challenges for businesses trying to stay compliant, changes in tax regulation. There are frequently FTAs issuing publications and clarifications in new laws. The frequent updates to the tax laws require businesses to adapt quickly to maintain compliance, as there's a famous saying that ignorance is not an excuse. So, as citizens of UAE, it's our responsibility to keep ourselves updated with the change in laws and regulations. Lack of knowledge and training. Businesses often struggle due to lack of understanding of tax obligations and requirements. On the next slide. The best practices for tax compliance in UAE. The best practices, first of all, keep ourselves up to date with the changes in tax laws and obligations. The regular audits. When I say regular audit, I mean external audit plus internal audits and quarterly management reports, reviewing the performance, reviewing the record keeping, and if there's any discrepancy, it needs to be sorted quickly. Conducting periodic audits to identify and to be compliance with, with the laws and sorting the issues out early, uh, keeping the proper documentation, ensuring all financial records are accurate, complete, and up to date. Next slide, Mozum. How to prepare for a financial audit. Ensuring all financial records are accurate and complete. This is the first step. The second step is reconciling the financial statements and tax filing. The third step is engaging with the auditors early to clarify any questions regarding tax compliance. And the fourth step is gathering necessary documentation such as invoices, contracts, and financial statements. Next step, next slide, Mosum. The auditor's role in assessing tax compliance. Auditors review a company's financial records to ensure that the company is in compliance with the UAE tax laws and regulations. They check that taxes have been accurately calculated and remitted and that the business has complied with the filing deadlines. Impact of financial audits on business reputation. Regular audits and compliance with the tax laws uh, may enhance a company's reputation by showing transparency and accountability inside the organization. Uh, it also increases the investors' confidence, as transparent tax practices can increase investor confidence as stakeholders will see the business as legally compliant. Next slide, Muslim. So what are the record keeping requirements for UAE tax compliance? Businesses are required to keep record of financial transaction for at least 5 years. And if they're keep using technology, it will not be difficult for them to even keep the record for more than 5 years if they're using cloud computing. Records to keep sales invoices, VAT returns, receipts, and contracts. These records support tax filings and ensure that the company is in compliance with VAT, corporate tax laws, and excise tax laws. Collaborating with the advisors and auditors. The tax advisors and auditors play a critical role in ensuring compliance with the tax regulations and preparing for the audits. Ultimately, it helps businesses understand tax laws, optimizing their tax position, and reduce risk associated with the non-compliance. Next slide. Communicating with the Federal Tax Authority. Open and transparent communication with the FTA ensures that any issues identified during an audit can be addressed promptly. If the discrepancies are found, businesses must work with the FTA to correct the issues and avoid penalties. The importance of tax filings and the timelines. The filing tax return on time is critical to avoid the late fees and penalties, which is, I believe, 1,000 for the first time and followed by 2,000. Businesses must file their VAT returns and corporate tax filings by their designated deadlines to avoid legal consequences as well. Next slide, Mohsen. This is another poll question. Is the company aware of the mandatory record keeping requirements for tax audits and under UAE law? The time starts now. The time is up. Only 8% people have selected no. That means most of the companies are keeping the records for the tax audits and making sure that everything is in compliance. Next slide, Moza. The cost of non-compliance and audit failures. Um, as far as the financial penalties are concerned, businesses that fail to comply with the tax laws face significant financial penalties. On the other hand, it's not only damaging the company financially, but there's reputational risk also involved. Non-compliance can harm the business's reputation, leading to a loss of trust among customers, investors, and other stakeholders. Handling audit findings and adjustments. After an audit, businesses must review the audit findings and implement necessary adjustments. This may include resubmitting the corrected tax returns or paying any overdue taxes. Next slide, Moza. How financial audits help in reducing risk. Audit helps identify potential compliance issues, and reduce the risk of penalties and legal actions. The proactive adjustments, businesses can address issues before they escalate into costly fines or legal compliance issues. The UAE is moving toward more automated and AI-driven tax audits. So the future trend in tax audits, the companies need to adapt the technology as early as possible to stay in the market. Uh, Mozo, next slide. That's it, guys. Thank you for listening. Um, Handing over to you, Haja.
Thank you so much, Mr. Taimur, for giving us such an insightful session and making it making the session so insightful. I can see the thumbs up and I can see the claps coming up as well. And I apologize for the initial technical glitch that happened for the slides. I hope you would understand that. And before we move on to the Q&A section, I would appreciate if you can scan the QR code and give us the rating on our Google review. And I would appreciate if instead of raising your hands, you can put your questions in the Q&A section so our team can take that and respond to you accordingly, because we cannot take individual discussions in this webinar. And there is a poll that's going to come on your screen as well for the rating for today's webinar. So I would appreciate if you can fill that up for us as well. And over to you, Ms. Nermeen and Mr. Temur, please take it over and answer the audience questions from our lovely audience.
Okay, so the first question we have for Mr. Taimun, what's the importance of financial audits?
It is very important. The first step that it leads to is accuracy in the financial records to make sure the VAT returns, the corporate tax filings, and the excise filings are accurate. The transparency, the legal compliance issues are sorted, and it also reduces the risk of tax evasion by not over or understating the tax.
Okay, so the second question we have, why are financial audits essential for compliance?
Um, to first of all, it's a legal requirement. So it is very important for um, uh, to be in compliance. For example, for corporate tax, most of the companies need financial audit, so it is important in that way. Secondly, by preventing the by preventing to have the penalties, it's also one of the benefits. It also promotes the accountability as well.
Okay, thank you, Mr. Taimur. Another question we have, what impact does VAT compliance has on the business?
Uh, First of all, because all of the companies in UAE are VAT registered, so if the company is VAT registered and doing the financial audit, that means whenever there's any trouble and FTA is up for the VAT audit, the company will need to use those financial audit reports that were issued earlier for the VAT audit also.
Okay, another question we have, if our business does not meet the financial audit threshold, which is 50 million dirhams in revenue, we still required to undergo any audits?
Uh, okay. The financial audit has when we say legal requirements, it's a very broad terminology. Maybe the regulatory authority which issued the license of the company needs the audit report. Maybe a bank needs the audit report. Um, and as far as the company which has a turnover of less than 50 million, um, they don't need audit report directly, but Maybe a situation arises, for example, if there's a FTA audit, so it will ultimately lead up to for the client to have the financial audit done and performed.
Okay, thank you, Mr. Tamur. Another question we have, FT insists to use UAE pass. Suppose UAE pass need to be used. If there is any risk we use personal UAE pass?
Can you please repeat the question?
Okay, FTA insists to use UAE pass. So, whose UAE pass need to be used? If there is any risk if we use our personal UAE pass?
No, there's no risk attached to it. The UAE pass for the authorized signatory of the company can be used while dealing with FTA.
Okay, thank you. Another question we have is tax audit is mandatory. If you have already financial audit, is it enough or there is no need for a tax audit?
Yeah, but tax audit will be performed by FTA for if there's any discrepancy involved, or if FTA discovers or suspects any non-compliance. But that's the situation where the company can use the financial audit to satisfy the FTA offices.
Okay, thank you, Mr. Tamwir. Another question we have is, okay, what are the penalties for non-compliance with the tax laws?
It's a very generic question. It has to be more specific because there are different kind of penalties involved. It's not just one penalty.
Okay, can you mention one of them?
For example, not filing the VAT return on time, it's being non-compliant with the tax laws. So the penalty is 1,000. But what kind of non-compliance we are talking about? It changes from client to client and scenario to scenario.
Yes, perfect. Okay, the last question we have, what's the key difference between financial audits and tax audits?
Financial audit, the scope is much bigger than the VAT audit because VAT audit only focuses mainly on tax, while the financial audit performs on the overall operations of the company. So the main difference is in the scope.
Okay, perfect. Thank you so much, Mr. Tamur, for answering all the questions that we had.
Thank you.
Thank you so much, Mr. Taimur, and thank you, Ms. Narmeen, for delivering such an informative and engaging session. Big thank you to everyone in the audience for joining us today and contributing to this enriching experience. And your presence and active participation have truly made this session very valuable. So we look forward to connecting with you in the future. Until then, if you have any queries on excise, VAT, corporate tax, please feel free to drop us an email. Our contact details are mentioned on the screen. Thank you so much, everyone, again. And looking forward to have you guys in another session. Until then, have a great day ahead.